It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching the China Show. I'm Annabelle Rulers with David Ingles.
Good morning. Let's get to your top stories today. Asian stocks rising with Korea leading these gains after a tech-led rebound and strong economic numbers boosting Wall Street.
Investors also weighing the latest Fed minutes, with officials indicating a shift away from agreeing on further rate cuts, putting the central bank on a collision course with President Trump.
Also ahead, a major U.S. arms sale to Taiwan is reportedly in doubt after pressure from Chinese President Xi Jinping and concerns within the Trump White House.
And Prime Minister Narendra Modi set to address global tech executives at India's AI Impact Summit later today. That's as his country seeks to attract more investment. We're live from New Delhi.
Right, lots to get through actually. So on top of, obviously we have four markets that are still shut today. You have proxies though that will, I think, give you a really good indication of the big themes across these markets. And I think the most direct one would be the Korea story, which continues to give. We've been waiting for this, and we have initial reports of this potential negotiations around higher HBM4 prices.
Yeah, that's right. So we just actually had some local media reporting in the last couple of hours, but talking about the price for HBM4. So that's the most up-to-date version of high bandwidth memory that's on the market, and it's just being started to supply at mass scale now to key customer NVIDIA, of course. But we're just getting more sense of what the pricing could actually end up being. And Chosun Ilbo, the newspaper, is reporting it's likely to be around $700. And you compare that to where we saw HBM3, for instance, again, according to their reporting, but it was around mid-500. So it's about 20 to 30% higher for HBM4, which really just tells you the sort of pricing power that these companies have. That's SK Hynix and Samsung, of course, that really dominate the HBM market.
Yeah, which would be, I think, when you look at the buyers for that, NVIDIA, for example, would be, of course, counter to their margins, right? Someone else's profit margin is someone else's squeeze as well. So on top of that, obviously, so we're dealing with a higher tech play today, obviously, that rotation back into Mag 7 overnight. The macro picture is still a stronger dollar. The Fed minutes indicate, of course, this interesting will and openness to hike interest rates, given, of course, the inflation dynamics there, and that's really leading to higher yields as we speak. And, you know, really on a day when you would expect a stronger dollar and higher yields to really hit risk assets, it's the Korea story, which we just pointed out, really offsetting most of that right now. Okay, let's have a look at markets right now, and, you know, how we should be approaching the open. Of course, lots of markets are still shut as we were pointing out, so you don't have Taiwan, which should be coming online. Right now, no mainland China, no Hong Kong, and also no Vietnam, which opens up in the next hour. Although you have futures trading online over in Singapore. Nikkei is better by 0.8%. We have a deeper dive into really that specific market later on in the show. The Nikkei, it's really trading not just on a pricey level historically, it's absolute level relative to it. Others are also trading quite substantially to the upside. 3%, that's really the market story today. Korea, we talked about this. In fact, it's showing up in your usual names and the suppliers of those usual names on your screens. 4.3% to the upside. The dollar, as we talked about there, Bloomberg Dollar Index. Obviously, there's the weakness in the euro. Down to conversation around the ECB, I think 50-day moving average as far as that's concerned. We're stronger on the yen, but that's simply coming off the worst day in several weeks there on the Japanese currency. And we're also just trading at, let's have a look, please, at the next board if we can. There we go on your screen. So the 2-year yield and the 2s and 30s bottom of the screens here. So slightly steeper on the curve. And yeah, perhaps still a tail risk here, but could the next move of the Fed, even if it's 12 or so months out, be a hike? Anyway, we'll get to that later on.
I think it's really interesting, and it really complicates the task for Trump's nominee, of course, Kevin Walsh, even when he is appointed to replace Jay Powell. But let's get back to that top story we're discussing. Of course, it is the local media reporting in Korea this morning about where Samsung is setting its prices for HBM4. With us is our Bloomberg managing editor for Asia Equities, Lian-Ting Tu, who joins us this morning. So, Lian-Ting, I mean, this has really just lit a further fire under Korean equities this morning.
Yeah, indeed. It is, as you guys said, 20 to 30% higher than its predecessor chip. And that would mean, according to Bloomberg Intelligence, profit margin on these chips for Samsung at 60%. That is really, really high. Overall, I would say Korea market opened on a good day. If you look at overnight trading in the US, it seems fears of AI disruption has receded, and more investors have come to realize that the software sell-off was overdone. And there was also a lot of positive news on the AI front. If you look at Meta, they agreed to deploy millions of NVIDIA processors, I should say, over the next few years. And even Apple came out to say they are accelerating development of 3 new wearable devices using AI. And all of that leads to memory chips. And who are the makers or biggest suppliers of memory chips? You know, we're looking at Samsung and SK Hynix. So today we see retail buyers really going in to buy a lot of Korean stocks, and also local institutional investors also went in today.
Lianting, outside of tech, and a lot of that is Korea, some of that is in Japan. Are there any other factors and themes that your team is paying attention to, on what really is still a very quietly outside of that story?
Yeah, I think Japan obviously is also riding high on this AI optimism, as I just talked about in the US overnight. And one thing I think our team is looking at for a story in a few days' time is just really the optimism in China. And I don't know if you guys saw a lot of Instagram videos about C-Dance really coming out with that kind of video app that got people really excited about. I know Hong Kong's shut, China's shut, but I think there's just a lot of optimism building about the sector in China, the LLM makers that are actually not listed in the US, right? In China, in Hong Kong, I should say, we see Minimax and Zhipu really coming out with some kind of breakthrough models that could really compete with the AI leaders for the like of Anthropic. And these, Anthropic and OpenAI are not listed in the US. So companies, or I should say investors, are really looking at those publicly listed Chinese stocks to pile their money into. So I think we're looking at a strong open potentially in Hong Kong after the big gain that we saw on Monday for the likes of LLM makers.
Lianting, thanks very much for joining us this morning. That was our Bloomberg Managing Editor for Asia Equities, Lianting Tu there. And I think it's also just important on that story as well, just the reporting around how much these companies are benefiting from these rising prices as well, because you've actually got analysts now saying it could be possible to see 30 trillion won operating profit on a quarterly basis for these companies. And we've never seen that for the Korea market.
Yeah, and I mean, what that means from a market perspective is even if you're up 30% on Korea, it's still really one of the cheapest markets in Asia because of that earnings follow-through that's coming through. In fact, we were having a look at this earlier on because we talked about this Japan story, right? And Korea is still trading in single digits, I think 9 times forward PE. Despite the fact that the market's more than doubled, right, over the last 12 months or so. But yes, I mean, astounding numbers. One, though, that you would expect from having really the two central companies to really where the supply pinch is happening.
Yeah, that's it. Yeah, Samsung, SK Hynix, really the ones to watch, of course. But let's shift to our other top story this morning because we've got the latest Fed minutes showing officials were surprisingly wary of cutting interest rates when they met last month. That's with some suggesting hikes might not be needed if inflation remains high. Let's go to Washington and our Bloomberg Fed and economy reporter, Enda Curran. So, Enda, I mean, these minutes are very interesting to pass over. What were the key takeaways for you?
Well, Annabelle, several takeaways. The first, as you say, Fed officials certainly in no hurry to cut rates further from here. The minutes were laced with references to stabilizing labour market and worries about inflation. So I think the stabilizing labour market probably comes as something of a surprise to many observers, given the Fed's commentary on the labour market into late last year. But then the kind of big standout line was this idea that several officials actually even felt that the statement and their communications to the public should reflect that, look, interest rates could go either way. It's possible that there could be a rate hike, given that inflation remains above its 2% goal. Now, To be clear, that does not mean the Fed is signaling a rate hike. It's a reference to views of several members. I say, maybe 4 or 5 policymakers on the FOMC. But the very fact that, after a year of worries about the labor market, warnings about not wanting to get behind the curve, lowering interest rates by 75 basis points into late last year. Then here we were, first meeting of the year, and there's a line in there warning that it's potentially that, policymakers may need to think about tightening at some point going forward. That was quite a surprise, a standout line, and I think overall is why Fed watchers think these minutes had a pretty hawkish tilt to them.
And just one last question on the Fed before we get to the ECB. Would it be safe? Well, obviously it's a spectrum of things. It's not as if the next move is likely going to be a hike. Well, that could change. But is it safe to assume that the balance of risks, and we talked about how a weak labor market in the U.S. was, the mandate of the two that the Fed was focused on, has that now clearly shifted in favor of, again, inflation?
Well, that's a good question, David. As I mentioned earlier, this language around the labour market stabilising, I think, is interesting because we know that the jobs market last year had its worst year for job creation outside of a recession since 2003. So a soft labour market is accepted by all, but obviously the policymakers think the worst of that is now behind, and perhaps for the year ahead, given the backdrop of strong GDP growth, labour market strong. To your point, they're perhaps turning their attention back to inflation, and that's why these warnings about what the language should say about potential for a hike at some point, making it clear that inflation remains persistently above the Fed's 2% target. But look, as you say, we have a long way to go in all of this. We need several months of readings on both on the labour market and on inflation to really get a good handle. And I think the Fed debate will probably remain topsy-turvy until, a few months from now when we get a much clearer narrative on where things are going.
And just as Dave mentioned, we do want to get to the ECB because we had that Financial Times report that perhaps Christine Lagarde, the ECB president, could be looking to exit before her term ends. There's a number of questions that are raised from that, and our Bloomberg economics team has been writing about them. But what are you thinking about so far?
Well, look, lots of details that we don't yet know, Annabelle. But as you say, FT reporting that this is what Ms. Lagarde is thinking about. At the very least, at face value, it just goes to show you what's at stake right now, given the political backdrop to all of these major central banks. Clearly, in Europe, in the ECB, there are concerns over what way the French electorate might go in next year's French elections. Depending what government comes out of that, of course, would have an important say in choosing who gets to lead the ECB. Madame Lagarde's term is up at October 27. Again, face value, taking this as it is, she's obviously worried, ECB's worried that perhaps a populist government might choose someone who might undermine the independence of the ECB. So notwithstanding there's so much about this that we don't yet know, it does drive home the fact that there's a lot of worries now about central bank independence, a lot of worries about the political backdrop, and how, of course, a mix of populism might ultimately impact on policymaking. And of course, nowhere better to see that than what's going on in the US right now.
And thanks so much for staying up for us. That was our Bloomberg Fed and economy reporter, Enda Curran, there from Washington. And coming up, we're going to continue the conversation around a possible Fed rate hike with Pepperstone Group and why they think US equity underperformance is still the trade.
Right. Equity markets, this part of the world, are taking their cue, of course, from the rebound in tech overnight. In the U.S., S&P futures, bottom of your screen, steady. The equity story in the Asia-Pacific today clearly is his outperformance in Korea. And remember memory? Yep, well, that's down to that. Chris Weston is with us, head of research at Pepperstone Group. Chris, good morning from Hong Kong. Thank you for joining us, sir. These flows that we have seen in not just last night, just in recent days, what does it tell you about willing buyers willing to support this global bull market?
Well, on the equity front, I think that's very much the case. I mean, it's still a bit of a stock pickers market. I mean, we've seen that earnings breadth come through, and the love for the Mag 7 stocks has dissipated, and people are seeing a more sort of universal earnings breadth, and that's a stock price, stock pickers market. And we see that through realised correlation, 1 month correlation, the S&P is at 6%, so it's rock bottom levels. And so you are seeing that those ability to find growth and opportunity outside of the Mag 7 complex and the AI complex as well. But that's also on a geographical basis as well. We've seen big outperformance for a while now from Europe and Japan and Kospi and those factors as well. But the S&P at the moment is trading a range 7,000, 6,800, and we expect it to probably continue to trade that range in the short term at an index level, with pockets of opportunity at a stock level, with increased diversification and opportunity coming through from that earnings breadth playing through. So I think a range in the short term, but within under the hood, correlations are very low, and you are seeing some decent moves and some decent opportunities playing through.
And what are the decent opportunities that you're seeing in particular?
Well, it depends on your time frame. I think short term, obviously, we're very much focused on the energy trade, given that the unfolding situations that are taking place in Iran and the mobilisation of troops over to that situation. I think the market obviously got very wrong-footed on that situation, thinking that some sort of deal was going to come through, and obviously the news flows changed quite radically overnight, and obviously we're seeing potential some outperformance coming from energy. I still like, from a bigger picture situation, I still think the US underperforms. I think we're still going to see European equity markets, which are mostly trading at all-time highs at an index level, continue to outperform. I think Japan outperforms. Even the ASX today, I remember last time I checked, we were about 2 points from an all-time high, because banks are reporting pretty good numbers, and obviously material stocks continue to find love, and energy stocks are finding buyers as well. But I think, obviously, when you come back to the US, a lot's going to ride on the numbers from NVIDIA next week. But it's interesting to see, there's just probably one of the lowest amount of attentions we've seen to NVIDIA's results that I remember in many, many quarters. The implied volatility in the stock is expecting a move up and down of 5.3%, which is one of the lowest implied moves for a long time. And I think that just speaks to people expecting them to meet earnings, to meet revenue and margins. But what is the catalyst to see them break out? And I think what you're seeing in NVIDIA trading at 194, 169 range is very thematic of the overall index, which is, as I say, trading 7,000 to 6,800 at the moment.
Do you see the risk for NVIDIA tilted to the upside or the downside? Because there's sort of two different themes at play. There's been the hyperscalers that have pledged major capex for 2026. But then on the flip side, you've got companies like the local media reporting we have for Samsung today that they're looking to price HBM at 20 to 30% higher than they had for HBM3. So that's clearly going to dent NVIDIA's margins as well. Yeah,
like from a competition perspective, I mean, margins at this point are in a very good spot. We're expecting margins in this quarter at 75%, and the trajectory is very much on the right-hand side. As long as that, I think investors are happy that trajectory growth is gravitating towards 77% by the end of the year, in the calendar year, then that's fine. But maybe that situation takes a back place. But what are we looking for from NVIDIA? I mean, it's I think they're expected to guide for the next quarter to $71 billion, margins a little bit higher. They'll give or take in that situation. But is it going to really set the world alight? I think the best way to trade NVIDIA at the moment is on a long-short strategy, because it's holding up really well in a market where other areas, the hyperscalers, something like Microsoft have been under pressure. A lot of the capex commitments obviously significantly hotter than what markets for, and this idea of return on the capital situation. And of course you've got the disruption side of things where everything's come undone, even REITs and some of the white collar sort of selling products have come under pressure. But NVIDIA's holding up pretty well on a relative basis. So I still think, they are a beneficiary of everything we're getting here. And I think that's, you trade them from the long leg of that situation and hope that they outperform relative to that situation. Even memory stocks, as you talk about there, have started to consolidate at very high levels and are finding buyers harder to come by at the moment. So look, I think NVIDIA's doing everything right. They've got the growth, they've got the pipeline, and Jensen Huang's going to be very positive. But I think in a market that's unsure about putting new capital to work in the AI spectrum, I think you trade that as a long leg in a sort of relative basis there.
And Chris, on that point you just made in memory, the increasingly less willing buyers at these levels in Korea, is that an early sign of a top in Korea, for example, or even Japan?
Well, I mean, the Kospi's just been a ridiculous market this year. I mean, with all due respect, it's just a thing. It's just absolutely gone. It's just blown away every other market this year, and that's been a reflection of, the memory stocks and those various factors. But yeah, it is difficult to put money to work in this market, even though you've got. You've got such strength, and obviously they're a clear winner from the fundamental story and the supply issue that's coming through. So I think buyers on dips will be very much prevalent in those markets, but I guess it's hard to chase the price here and wait till obviously you see new money coming in, volume picking up, and then I'd be keen to chase that because the collective are seeing something that perhaps I'm not, and I'll back that. But for now, consolidation does keep me quite wary in these stocks, and I wouldn't be necessarily buying and being aggressive. I'll wait for the market to show me that they're ready to take this one higher. But yeah, look, I think the AI story is obviously changing every day. I mean, we're hearing private companies coming out now trying to appease the funding markets and saying, look, we're in a good spot, and trying to get ahead of an issue. So look, there are some grey clouds circling around here. I think obviously Nvidia's number, but Oracle, I think when they come out with their numbers, I think it's estimated on the 10th of March will be the big one. I mean, we know their funding mix, but I think that's going to get a lot of attention from the market. And I think, if that could cause the next sort of level of volatility coming through in the AI spectrum coming through play in that part.
Chris, very quickly in 10 seconds, if you could, gold, level to watch there. What would that level tell you?
Well, it depends on geopolitics, but yeah, obviously the big level is 5,100. That's where we've failed on the upside multiple times. Obviously, if the geopolitical situation becomes more precarious and crude prices really break out to the upside, which would be strange, but that's possible, then I think crude breaks that. But otherwise, I think that's the level to watch at the moment, because realistically, take away the geopolitical issues, and you've got the debasement trade being unwound and being called into question, which does put some material downside in the gold price short term.
Chris, thanks so much for joining us. That was Chris Weston, their head of research at Pepperstone Group. And you can rewatch any of our segments via our interactive TV function. That's TV Go. You can also become part of the conversation by sending us instant messages. So do check it out. This is Bloomberg.
Right, we're coming off quite a decent rally on Wall Street overnight. Not a lot of market action as far as that corner of equities are concerned. We are still feeling it though in cash markets that are up and running here in the Asia Pacific. So no mainland China, no Hong Kong, no Vietnam, and also no Taiwan today. And of course, those markets should be coming online on a normal basis, of course, in the next few minutes, or some of them at least. Right, plenty more ahead. This is the China Show.
Warned about sending more weapons to Taiwan. What was your response then? Were you going to send more weapons to Taiwan?
I have a response. I'm talking to him about it. We had a good conversation, and we'll make a determination pretty soon.
Yeah, that was President Trump saying earlier this week that he will soon make a decision on weapon sales to Taiwan. The Wall Street Journal is now reporting that a deal is in limbo following pressure from Beijing. And so, of course, it's not clear from the soundbite whether or not the discussion around consultations, with Chinese President Xi Jinping will factor into that decision, of course, which is the big sticking point, obviously, as we go into the thick of this specific issue. For more on this, let's bring in our Bloomberg Politics editor, Laura Davison, here with us on set to talk us through this. And what is the likelihood of a Taiwan arms deal materializes this week, in the coming weeks?
Highly unlikely that something comes together just in a couple weeks. A couple reasons. One is because these deals typically take months, if not years, to materialize. We just had one announced a couple weeks ago, this $11 billion deal. And two, because of this upcoming Trump-Xi meeting that's on the books for April, we have gotten some some signs from Trump that Trump and Xi are talking about this. They had a call a couple weeks ago. Trump, after that call, said that he would soon make a determination about whether there would be a deal. The readout from the Chinese side after this call, had some pretty harsh language in there saying, essentially the tone was U.S. butt out of China-Taiwan relations here. So this is really a change in policy. The U.S. previously has not really let the relationship with Beijing weigh into the relationship with Taiwan. Here, we're clearly seeing that these two things are interlinked as they talk about trade, defense, and a whole host of issues.
So what are the levers? As you say, it is very, it's been that core tenet of U.S. policy toward Taiwan is keeping Beijing out of it. But if she is able to exert some influence, what levers is he likely to pull?
Well, what he has right here is he has Trump, who really wants to please Xi. We see every time Trump mentions it, he says, "Oh, I have a great relationship with the Chinese president." And as they're going into this meeting, what both sides want are what they call deliverables. So this is some sort of actionable deal, and this could be something as small as reopening some consulates that were closed during COVID, or could be a massive economic deal. What we've heard from some reporting from the Journal is that they are suggesting that the size of this economic package, the Chinese are willing to do a much bigger deal if the U.S. gives some concessions on Taiwan. So we're really seeing these two things interlinked in a way that they have not been in history, and could really, really raise a lot of alarms in Taipei.
And just taking a step back, how has that relationship, defense and trade between the U.S. and Taiwan, changed under Donald Trump?
It is really, we haven't seen policy-wise it change. We had this deal come together, this trade deal and an arms deal both come together in recent days and weeks. But what we're seeing is a lot of concern from Taipei, as well as the Chinese, that there's, potentially a strategy shift here. You see the Taiwanese worried that if, for example, if a lot of this chip manufacturing moves to the U.S., that suddenly the U.S. isn't as reliant on Taiwan from an economic security perspective, and therefore will be less inclined to give weapons, particularly if Trump, wants to give some concessions to Xi. That is kind of in all of the different levers here, appear to be one of the things that he's most open to giving away in these negotiations.
Laura, thanks so much for joining us. That was our Bloomberg Politics editor, Laura Davison, there, and we'll have more ahead. This is Bloomberg. Nae Takeuchi has been formally reappointed as Japan's Prime Minister following her resounding electoral win, now turning her attention to the annual budget and implementing a U.S. trade deal.
As for the upcoming Japan-U.S. summit, I would like to not only further enhance the trust with President Donald Trump, but also strengthen Japan-U.S. relations in various fields such as national security, economy, and culture. Additionally, I am determined to enhance Japan-U.S. economic security, including critical minerals, such as rare earths. I would also like to have a discussion with the U.S. on how to proceed in the marine mineral resource development in the waters surrounding Namani-Torishima.
For more, let's go to Tokyo and our senior editor, Brian Fowler. So, Brian, it seems that with this historic victory in the lower house, really Takeuchi has a mandate now to enact some quite ambitious policies. But what are likely to be her priorities, do you think?
Yeah, so first of all, she has to push through passage of the national budget for the fiscal year that starts in April by March, simply to avoid having to put together some kind of supplementary budget to tie us over until that gets done. So that's going to be her first priority. The second one is this trade deal is timely because, of course, she's scheduled to meet with President Trump in March. So she wants to get that done before she goes there, so they'll have something to talk about. We've got the first tranche that we heard about earlier this week of $36 billion. We had NHK this morning saying that the second batch could include some kind of deal related to next generation nuclear power generation, or perhaps copper refining facilities, or producing materials for storage batteries such as lead. But, one interesting thing she said last night is that even after this election win, she doesn't think that gives her a green light to do just whatever she wants, which is pretty interesting considering she led the LDP to the most decisive victory in history, and yet she's still talking about building a consensus for her agenda. So I think that shows that she's going to be very smart about first of all, prioritizing these big things that have to be done before she moves on to the domestic agenda that she talked about during the campaign.
Yeah, and Brian, I wonder then whether that, her, I don't want to call it stepping back or sort of toning down the language, but would that be an indication that some of the, whether that's the budget or some of the pronouncements domestically that she's made leading up to the elections, might take longer to implement rather than the opposite?
Well, Takaichi is pretty famous for moving quickly. I mean, she did an awful lot since becoming prime minister back in October, and I think that's one reason why she resonated so much with Japanese voters. They see her as somebody who really does focus intensely on achievements, and so she's toned down some of her commentary. She's stressed that while she does have this agenda to boost the economy, probably by suspending the tax on food purchases for 2 years, she wants to talk about that. But she's also emphasizing that whatever she does in terms of fiscal policy, she intends to maintain a very responsible approach to avoid stirring any concerns about the national debt.
Brian, fantastic. Thank you so much. Brian Fowler there, our senior editor in Tokyo Forest. And really this resounding win coming through there is really one of the validations that this equity market in Japan has ridden on as far as the latest catalyst was concerned, right? And, this sounds very strange in my head when I say it, that the Nikkei is now trading more expensive than Indian stocks. It's not trading more expensive than the S&P 500. Let alone, of course, relative to itself over the last 2 decades or so. So what are the risks that investors should be paying attention to now that valuation is no longer the main attraction here out of the Nikkei 225? Let's bring in Hideyuki Sano, our Bloomberg senior stocks reporter, to take us through this today's Taking Stock piece. And yes, help us understand the philosophy here. What are we talking about?
Yeah, so as you've mentioned, the Nikkei is now trading above Indian shares, and it's almost its valuation today is above 24 times its earnings for the next 12 months. So it's almost as expensive as Nasdaq Composite Index, which is probably one of the most expensive stock benchmark in the world. And so investors are starting to question how much upside there will be. And if you look at the broader topics index, it's also traded at around 18 times its earnings. Now, its traditional range is of price and earnings ratio was around somewhere between 12 to 16 times its earnings. So it's way above its traditional range. Now, the question is, some people will say that, because Japan's economy is changing, there's inflation and there's corporate governance, etc. So the topics may not be constrained by the old valuation regime, but the question is what the new range will be. Is it 14 to 18 times, or is it 16 to 20 times? And if it's 14 to 18 times, the market is still expensive by the new standard. So investors are very much becoming cautious about buying the market higher from here.
Yeah, it's interesting because even with that caution, you still have Goldman Sachs, Morgan Stanley, JP Morgan upgrading their views on Japan just in the last few days. But when you talk about the range and I guess the risks as well, what are the biggest ones that you see being posed right now?
Yeah, there are other signals that suggest that the market seems to be quite overbought, at least in the very near term. One good indicator is to look at how far the market is relative to its moving average. The TOPIX is now trading at more than 20% above its 200-day moving average. Now, in the past, the market has seen pullback almost every time if the topics index rises about 15% above the moving average. So that also suggests that there's a risk of a correction in the market. And also, if you compare the size of the Tokyo market with Japan's GDP, there has been a very stable relation between the two. And if you look at that relationship, you can also draw a similar conclusion that the market is clearly a little bit overbought at this point, because Japan's GDP is still less than 700 trillion yen, but the market capitalization of Japanese market is reaching almost double of that. So investors are getting cautious again, and they know there are a lot of positive reasons for the market, but at the end of the day, the valuation does matter. So it will be interesting to see how far the rally can go on.
That was our Bloomberg senior stocks reporter Hideyuki Sano there, and we can do a deep dive actually into a company now that's outpaced the gains we've seen for the broader Nikkei since the April lows of last year. This is Murata. It is the world's largest supplier of so-called MLCCs. They're tiny, yet essential components that regulate power flow into electronic devices from the likes of Apple iPhones, Tesla cars. Their products are also in demand from the hyperscalers now, but it is a company as well that says geopolitics are forcing it to diversify supply chains and build inventory to protect deliveries.
Yeah, the company president Norio Nakajima also told us that China remains a key market despite these tensions with the United States.
Of course, depending on the area. However, in case of MLCC, we still have 10 years difference of technical capability. However, catching up time is rapidly. So getting higher and higher.
A bulk of your business is in China, even global customers inside China. How are you affected by the geopolitical tensions between Beijing and the West?
Some of the component we are producing in China with integrated some local materials, some local machine. So most of the area we ship the material and the equipment from Japan to China. However, some competitive area, we purchase material and machine domestic in China.
Which raises a question, what about geopolitical tensions between China and Japan as well? Does that complicate the picture for you?
Yes. And after becoming a president on year 2020, we start to accelerate to have multi supply chains. And we try to cooperate or cover both economical areas. One is U.S. centralized economic areas. And another one is China centralized economic areas. So population in China is decreasing a lot at this moment. However, if I talk about the Chinese centric economic area, will include some of Africa or other areas, since they aggressively invest infrastructure to those areas. So our Chinese customer accelerate to expand their exporting smartphones, PCs, other devices. So Chinese market itself is still growing.
You have talked about not having any plans for U.S. manufacturing, just because a lot of your components go into products that are assembled here in Asia. If the geopolitical situation becomes worse, could you even consider localizing in North America?
At this moment, we have no plan. However, again, most of the data center demand coming from U.S. I think more than 80%. So I think a very tiny MLCC, it's quite difficult to transfer the technology from Japan to US for MLCC type of business. However, some of assembly type of business, we have some possibility.
Geopolitical tensions also impacting rare earth. How is that affecting your business? Are you readjusting, reallocating based on it?
Of course, first priority to secure our delivery to our customers. So we have some inventory to secure, to avoid supply constraints. However, on the other hand, we started the evaluate so dual or triple supply chains, even for layers.
How long is your inventory rundown right now?
We cannot say exactly. However, if that situation will continue more than 2 years, it has some impact.
That was the Murata manufacturing president, Norio Nakajima, speaking to us in Kyoto. Now, a reminder of our new online feature here, the Bloomberg Video Hub. Subscribers can explore live streaming, news, interviews. You can rewatch that, of course, that Sherry just did there, among many, many others, of course, that we have done in recent days or so. Documentaries, report analysis, and more, of course. Check it out, bloomberg.com/videos. Right, welcome back. U.S. two-year yields holding near highs over the last couple of hours or so. The Fed minutes certainly showing this openness to potential rate hikes down the road if the inflation story remains as sticky, if not worsens over the coming months or so. Dollar, as you can see, 11.90s, so we're coming off quite a strong showing. The dollar is flat right now going into, of course, the thick of things this Thursday, the Asia Pacific.
Yeah, let's also talk about central banks in this part of the world, because we've got Indonesia and the Philippines. They're set to announce rate decisions on Thursday, and they are expected to actually diverge to stave off the risk confronting their economies. For a preview, let's bring in our Southeast Asia reporter, Claire Zhao in Manila. So we can start with the Philippines. It is expected to hold rates, but why are we anticipating that, and what are the factors playing into that decision?
So maybe the biggest factor that the Philippine Central Bank will have to consider is the dismal economic growth we've seen last quarter. It went down to 3%. That's the poorest print we've seen in nearly 15 years outside the pandemic. And it really underlines how much that massive corruption scandal regarding infrastructure projects have really dragged down investor confidence, consumer confidence. And that'll be the main factor that the central bank will be considering today. They're largely expected to cut the key rate again, if ever. That would make it around 225 basis points in this easing cycle, one of the deeper easing cycles we've seen from the central bank. However, the central bank governor has signaled that they might be nearing the end of the cycle now. There's not much more they can do to lift demand, and they are hoping that once public spending improves and the graph probe finishes, that we will see an uptick in economic growth later this year.
Claire, what about Indo? What's the outlook there for that central bank?
Well, Indonesia would love to cut rates like the Philippines, but they simply have no window, it seems. Like, they've been on hold since October last year. And now, if they were cautious last year, they'll be even more cautious now. We've seen deep market turmoil in the past few weeks. You've had both the MSCI and Moody's creating warnings for investors on a bunch of issues. You've had investability in the stock market, the fiscal outlook for Indonesia, even policy uncertainty of this new government. And that's caused a sell-off in both stocks and then bonds. So Bank Indonesia will be keenly aware that the rupiah is near record lows, still the worst performer in Asia, even though emerging market peers have largely gained off dollar weakness. So they might be on hold yet again, and they will keep looking for room to cut rates later this year.
All right, fantastic. Claire, thank you so much. Claire Yao in Manila for us with a preview of the two central bank decisions in Southeast Asia, and as she nicely laid out for us there, the perhaps diverging paths because of domestic idiosyncratic considerations among both, of course. All right, just very quickly, well, first a reminder, in case you're just joining us right now, a lot of markets are still shut. There's Thursday in Asia Pacific. That includes mainland China, Hong Kong, Taiwan, and also Vietnam, which opens up in the next hour. Okay, two markets in focus, Korea and Oz. As you can see on your screens, we're in the thick of earnings season, of course, in Australia. Not to mention this commodity price boom we're seeing playing out across, of course, the some of the big mining stocks here, and including, of course, the financials, which have been catching quite a strong bid as far as that's concerned. On top of that, also the jobs numbers coming out earlier on, providing a further boost, I believe, to the yield space there. Aussie, the ASX 200 up by about 1%. That should be close, if not extremely close, to fresh all-time highs there on the benchmark itself. Okay, very quickly, the dollar's coming up on your screens. Dollar Japan, which is now, again, to the upside. And yeah, guess what? We're now back to 155, give or take, on the pair. They're following a substantial move from around this time yesterday on dollar Japan there. I think the biggest move in since at least January. So we're moving to the upside, still weakening there, despite the dollar weakness that's come through as well in the last couple of minutes or so.
Yeah, and just you mentioned ASX 200 at or close to a record. Actually, we are at a record high. So the index there at 9,100 points or just over, and we are seeing metals that are really leading the gains today. But more ahead, this is Bloomberg.
Welcome back. You're watching the China Show. No trading across Greater China today. Markets are still shut. Mainland China, of course, here in Hong Kong. Well, we have lots to talk about elsewhere, though. When you look at a market like Korea, for example, so we'll get to the memory-specific story in a moment and the potential of hikes there, price hikes specifically. Just in the last few minutes or so, we have resumed, I believe, trading on several contracts following the sidecar that was triggered about, let's call it about 18 minutes ago in Korea, following that 6% move on the index and also the contracts. We have resumed trade, as you can see, of course, on the screen, of Kosdaq 150. We're up 6%. The Nikkei is also doing quite well. And as they say in Australia, Bell knows this, the market has been, what's it, fair dinkum.
Fair dinkum.
Yeah, fair dinkum. There we go. Conditions. Is that a good way to describe this bull market?
No.
Okay,
no.
wrong application of the term.
Nice try, though.
Okay. We're set to close, though, at a record high. There we go. What's the point? Okay, let's have a look at Bell showing off her Australian again.
My lingo.
There we go. Samsung, SK Hynix, HBM4, and the potential prices and negotiations, of course, could be 20-30% higher. Samsung is up 3.5%. It's not playing out so much as far as SK Hynix is concerned. But yeah, let's have a look at what else is happening across these markets. We talked about the strong dollar, the weak yen. Oil is also starting to act up again. To put all those things together for us, Mark Cranfield is with us out of Singapore, our MLive strategist. Mark, among the many things that we just mentioned there, and feel free to, of course, if we missed anything, what's top of mind for you this Thursday?
Well, it has to be Korean stocks. I mean, it's just quite funny to me personally because during this Chinese New Year period, I was chatting with a couple of fund managers, and they were saying, well, maybe this long holiday in Korea, maybe it will calm everybody down, and by the time they come back for trading when the markets reopen, they'll have a more reasonable approach to it. No, the market is just flying again. So, as you say, I mean, increasing prices of products which are already in high demand is bound to be very helpful for equities as well. So what more could you ask for? If you're bullish on Korean stocks, everything is nicely falling into place to keep this going. And no wonder we're having such a great start to the reopening in Korea today. Of course, there's some big things in the background. We've still got to get through Nvidia earnings next week as well. But if you take Korea as an example of where money has moved away from other parts of the world to chase some of these dreams here in Asia, it looks as though Korean stocks are set up for a pretty good run again. And this maybe is just the start of yet another fantastic couple of weeks for the market there.
Yeah, it's an interesting dynamic, and where else you're really seeing investors piling into is still Japanese equities, even though there's concerns maybe it's just getting too expensive now. But what are you watching there in particular?
Oh, the inflows are just crazy. I mean, if you look at the data that came out this morning, the foreign inflows are the biggest we've seen since October. And it's already been a very, very strong run. And traders can see this, the domestic traders can see where the foreigners are coming from. So in the past 12 weeks, we've had something like 11 out of the 12 weeks have been positive inflows, and the biggest one was the latest. So foreign investors are really giving the Takeichi government a really big thumbs up. They're saying, okay, we really believe in you. We're very happy to see the direction you're taking. We believe in these fiscal constraints you're talking about. You've got the yen under control. JGB yields have been coming down a bit. The conditions look as though they're extremely good for the Japanese market to continue going. And then when you compare it to Korean stocks, some people are saying the valuations are pretty high in Japan, but there's nothing like you're seeing for the major stocks in Korea, the Samsungs and the SK Hynix. So when you've got that as a comparison, Japanese stocks are still looking as though they're in a pretty good place.
Mark, just your thoughts on what's happening in Sydney, in Oz. Obviously, we're in the, I think, thick of earnings season. Obviously, very commodity-heavy market. Tends to be inflation leading, if that's the scare that you want to get into. But yeah, set for record highs there in Australia.
Yeah, I don't think anyone's going to be too worried about the inflation situation in Australia when you can see globally there's not a great deal of pressure yet from a global point of view. And you've got the Australian dollar performing extremely well, which will offset some of their inflation concerns there. I mean, we've got stories on Bloomberg talking about Australia now being the third biggest country in terms of demand for places to build these AI data centers, because Australia's got obviously plenty of land for them to be able to do so, so it's very easy for people to go there. While you've got that going on, a commodity boom, you've got the RBA taking a measured approach to raising interest rates. No wonder the Australian dollar is so strong. So all of that put together, and you compare it to other markets in Asia as well. Yes, sure, the Australian market may be getting near all-time highs, but then there are so many markets which are doing the same sort of thing. And the US markets are still looking relatively expensive as well. So by comparison, Australia doesn't really stand out as though anyone should be too concerned about that.
How close are you tracking oil prices? Because yesterday it was a very significant move, just given these geopolitical risks that we're following around potential military intervention, rather, from the US into Iran.
Yeah, from a trader's point of view, I mean, that's the key point, is how much is that premium in the oil price related to the situation between the US and Iran, and whether those talks fail or whether it causes the United States to want to enact military action against Iran. That premium is getting bigger. It could be anywhere between $10 and $20 in the oil price. So as soon as that situation cools down, oil prices could fall quite a lot, because from what we're hearing, global supply is still pretty good. Demand is okay, but there's a bit mismatch between supply and demand. It's really all about that geopolitical premium. Of course, if there is actual military action, that premium could go even fatter. But for now, it's looking pretty chunky. That amount of extra price in the oil is really down to the Iran situation. And from here, it depends on the announcements. President Trump is going to have his State of the Union next week. And people are speculating there will be quite a lot to say about Iran there. So the premium will probably stay for at least another week. And then let's see what happens after Trump speaks, because that is really the key to how much further the rally can go in oil. But demand doesn't really justify oil prices where they are. It's all about geopolitics.
Yeah, it'll be interesting because, of course, he can't also risk alienating voters ahead of midterm elections this year who might not want to see any sort of aggressive intervention into Iran as well. But that was our MLive strategist, Mark Cranfield, there, and you can follow more on this story, all of the day's trading, on our Markets Live blog. That's on the Bloomberg terminal at MLive Go. You can get a market rundown in one click. There's commentary and analysis from Bloomberg's expert editors, so you can find out what's affecting your investments right now. More ahead. This is Bloomberg. taking a look at shares of the Japanese chip equipment manufacturer Advantest this morning, because we are just seeing them moving after we had some media or some reporting essentially that the company is saying that it's looking at whether an unauthorized third party gained access to its network. They're saying that a cybersecurity incident was found on February 15, so just earlier this week. They are looking at the impact on financial results as well. That's currently being examined. And they've also isolated the affected systems as part of their response protocols. You are seeing that stock, though, just a bit under pressure.
Right. Let's stay in tech, just to borrow that theme and just carry that over. Turn our attention to India. India is hosting one of the world's largest AI summits this week. A lot of activity there, of course, from today, with Prime Minister Narendra Modi seeking to lead this heated race to develop frontier models. And Modi addresses the summit later Thursday, and we're joined out on the ground there out of Delhi with our Insight anchor and co-anchor Haslinda Amin covering the event for us. Haz, extremely busy past 24 hours. I would imagine that even ramps up even further today. What's the latest on the ground there?
Well, the latest on the ground is that it's all abuzz with AI excitement. Everywhere you go in New Delhi, you see posters of Prime Minister Narendra Modi, who has become the poster child for India AI. Now, on one of the pictures of Narendra Modi, we actually had for India, AI stands for all-inclusive, and therein lies the bold ambition of Indian AI. It wants to give access to all its people, all 1 billion of them. India is no stranger to technology, of course. It's been on the radar of all companies, all tech companies. In fact, it ranks third in terms of AI competitiveness, behind only the likes of US and China. But years of underinvestment currently weighing on India's AI ambition. But that seems to be changing, because in the course of the last few days, we've seen a lot of commitment already. In fact, India expects about $200 billion of investment in AI in the next 2 years. And Adani has committed about $100 billion in the next decade to build up India's AI. And of course, other companies, the likes of Google, have come out to say that they have lots of initiatives, including building, strategic fiber optics, linking the US and India to help in this AI ambition. So lots of initiatives being announced just this week alone. We're waiting to hear from Prime Minister Narendra Modi later this morning on his own plans. Of course, this is a big moment for Prime Minister Modi. I mean, he has his peers coming as well. Lula is here. Macron is here. He's getting a lot of support from the big tech, the likes of Microsoft, OpenAI. And I took that opportunity actually to catch up with the president of Microsoft to ask him about not just their plans for India, but also their relationship, long-term relationship with OpenAI. Take a listen.
I think it remains a critically important partnership for Microsoft. We bet on each other, but it's not as exclusive as it was, say, a few years ago. OpenAI uses our compute, they train models in our data centers, but they work with other companies as well. We critically rely on OpenAI's frontier models. They are among the best. On many days, they are the best in the world, but we have a relationship with Anthropic. We use open source models. We're developing our own models. So on both sides, we work with more partners, but I think the partnership between the two of us remains an imperative. It's a huge priority for us at Microsoft.
Just to put that partnership in perspective, of course, Microsoft has been a key backer for OpenAI, but of late, Microsoft has been building its own AI models. It's also exploring a lot of different partnerships. Hence the question whether or not that partnership remains intact. And we just heard from Brad Smith. It is, he says, for the long term.
Well, I'm glad the OpenAI aspect came up, because we now have this breaking scoop that's coming out as well, and our viewers might have seen it, some of our terminal clients already, that OpenAI specifically is close to finalizing the first phase of a new funding round, which could rake in, get this, $100 billion, record-breaking financing deal here that would certainly give should we still call it a startup? Certainly it's raising money not like a startup right now to build out its AI tools. And really this goes into, I think Sam Altman-Bell is also where has this. He's set to attend, of course, the India AI summit there, Bell.
Yeah, well, $100 billion was sort of the figure that had been really speculated and what we've been also reporting on, but more than 100 billion, and also getting more context on who's going to be investing what. So we're hearing from sources that Amazon's going to be looking at around $50 billion, SoftBank as much as $30 billion, and Nvidia as well. I think this is an interesting one because there was a lot of reporting that maybe Nvidia was sort of looking to back away from this and scale down their investment, but we're still hearing they're looking to put in $20 billion into this funding round. So a huge funding round, valuation as well also moving high. But let's just get more on what you're hearing there on the ground, because you mentioned Google and you actually spoke with their AI research laboratory as well, DeepMind. So what did you hear on that front?
You know, it's quite interesting that we are just talking about the funding round. In fact, I did pose a question to Google, to DeepMind, in fact, why there is this rush in, wanting to invest and build out the AI, given that it is still uncertain what the risks are out there and what the real benefits are. But of course, they say that you can't put guardrails on them. You have to keep investing and, ensure that it works to the best. And in my conversation with DeepMind, of course, the CEO, Demis Hassabis, it was a wide-ranging conversation, Val. We talked about AGI, for instance, which he says could become a reality in the next 4 to 8 years. That's really very, very soon. But more importantly, we talked about India. Why now? Why India? Take a listen to what he had to say.
I've worked on AI my whole career, my whole life, because I believe it could be the ultimate tool to accelerate scientific discovery and medicine, and also help with some of the other grand challenges facing society today, like climate change and energy. All of these things I think AI can help and be applied to. On the more individual scale, and maybe also for India specifically, I think that this incredible technology, powerful technology, is sort of available to almost everyone around the world, maybe only with a lag time of a couple of months behind the absolute frontier. So what I imagine if I was a young person today thinking about working in technology, maybe building a business, is I think there's incredible untapped potential here. And using these technologies, you can almost sort of become superpowered. You can kind of do 10x of what I think an individual engineer could have done in the past. And so I think there's incredible new business opportunities and new types of jobs that will be even more high earning and more valuable and more fulfilling than perhaps some of the jobs that will be disrupted by AI.
How do we position for that?
No, I would also just add a few more things. I think part of the potential for average benefit is enormous, but I think there's some work we all have to do. So, for example, if I think about questions of access, that's so important. How do we make sure everybody actually has access to the technology to be able to use it, capitalize it? Other questions of access, which are particularly important in countries like India, are access through different languages. For example, I mean, India has many, many different languages. And I think focusing, for example, on making sure that people can actually access the technology in their language, in their culture. And that's one of the reasons we're spending so much time on in the Indic languages. I mean, we have a project right now with Project Vani, where we're trying to work across something like over 700 districts and all the dialects that are used in those districts to see, can we build in more Indic languages? So if you think about that question of access and linguistic access, that's one of the ways you democratize the possibility of people being able to take advantage of this technology.
James Menyika there, along with Demis Hassabis, giving that take on why it is important to ensure that everybody has access to AI. The question is, how do you do that? And in my conversations here at the summit, people say that the best way to do it is actually through an open source kind of model as opposed to a closed source of model, which is being adopted by the US.
Yeah, but certainly China is really front and center when it comes to that open source effort. Has really great interviews as well. And we've got a lot more coming up with Prime Minister Narendra Modi also set to address the AI Impact Summit later today. And subscribers can also turn to the terminal for more on this ongoing event. T-Live Go is your function for the latest updates, plus commentary and analysis from our expert editors. More ahead. This is Bloomberg. taking a look at some of the stocks that are moving in the Aussie session today. We've got the ASX 200 sitting around. We're actually past an intraday fresh record high. Lots of different earnings as well that we're continuing to track. And you can see here Rio Tinto, for instance, moving to the upside. The big story out of that one was that they've boosted their stake in a Canadian lithium miner. You've also got the likes of Telstra, for instance. Very strong gain there as well. Their first half dividend beating estimates. So some gains from their mobile unit, but Pilbara Metals, for instance, Wesfarmers as well, moving very much to the downside. So both of those companies in focus. But let's get more on the Wesfarmers story because, as we said, they are falling in Sydney, those shares. There was a warning about cost of living pressures. That's as it announced a 9% increase in first half net income. Bloomberg's Paul Allen joins us now from Sydney. So, Paul, I think it's an interesting one. We were just talking there in the ad break, but I found it fascinating that you've got in the Wesfarmers portfolio Bunnings, for instance, the sort of Home Depot store essentially, but you've got Kmart, Target. These are companies that typically seem to benefit when people are feeling pinched at the wallet.
Oh, absolutely. I think if you could name two stores that the canaries in Australia's consumption coal mine, it's those two, Bunnings and Kmart. Australians love shopping at these stores. And the fact that Wesfarmers sees fit to mention that there might be a problem with the Australian consumer, saying, cost of living pressures are uneven, that it's affecting some households, it's worth listening when Wesfarmers says this. Now, the results from those stores and Officeworks as well did come in line with estimates, but it wasn't enough for some of the analysts who watched this stock. So we're seeing Wesfarmers sinking. It's off a little bit more than 4%, as you mentioned. It is off session lows, however. But all that said, net profit, $1.3 billion. The interim dividend, $1.02 per share. It's not too unhealthy. And Wesfarmers is also very diversified. They're involved in the chemicals, mining, fertilizers business as well. The revenue from the health business was a narrow beat also. So it's not all doom and gloom. And the figures released for the first 6 weeks of the second half suggest that the consumer is hanging in there. That's despite the rate rise that we saw from the RBA earlier this month.
Paul, just to talk about the other big, among the big ones, of course, coming out today, Rio's due out with results in the next few hours or so. What is the market expecting there from the miner?
Yeah, well, Bloomberg Intelligence is expecting EBITDA to increase from anything between 14 and 70%. That would take it up to a figure of maybe 25 billion. So that is higher than consensus. Rio Tinto does rely on iron ore for about half of its revenue. Iron ore prices have softened a little bit more than forecast in the second half. You mentioned lithium there in the introduction. Rio Tinto is attempting to diversify, so it's taken a majority control now of that Nemaska lithium project in Canada as well. Now, copper is another segment that we're going to be watching closely because BHP did so well out of copper in the last half. Rio Tinto's copper exposure, somewhat less, but that giant Oyu Tolgoi copper mine in Mongolia is starting to approach full capacity. So we'll be watching for some commentary around that. And speaking of commentary, we heard from the Glencore CEO as well in the past 24 hours. And of course, these results fall in the period that those merger talks between Rio and Glencore did not get fulfilled. But the Glencore CEO, Gary Nagle, saying that the world's top miners are going to have to get bigger because the mining space, the metal space, the commodity space becoming increasingly political. And these miners are now much, much smaller than those big AI tech firms. So he's saying they're going to have to get a lot bigger to get the ear of political leaders.
Paul. Thank you so much, Paul Allen, there in Sydney for us. Let's stay on the markets theme here, specifically when you look at some of the markets that are up and running right now. Singapore is actually punching quite substantially to the upside here. Singtel and OCBC. I think we are, in fact, at about, and just bear with me while I just double check this, volumes are about 30% heavier than usual, and the Straits Times at about just a shade under 5,000. Should be putting us very close to record levels, in fact. So we are just shy of a couple of days back, of course, is when we touched that 1,000 handle. Right, SoftBank shares, this could be OpenAI related.
Yeah, it definitely seems to be, because you're seeing that big move intraday after we had that report coming out that the OpenAI funding is on track to exceed $100 billion in that latest round. And what we're hearing from our sources is that SoftBank could be looking to put $30 billion into that. So, of course, very much tied to the outlook for that major AI company in the US. But more ahead, this is Bloomberg.
There we go. Humaonid robots, they're taking center stage on Monday at China Spring Festival Gala, the show featuring, of course, robots from 4 startups, including Unitree, performing the dance moves in a kung fu routine alongside human performers. State media quoted Unitree's founder as saying the industry is advancing, quote, beyond mere technical display toward a full ecosystem from foundational models to real-world applications. Now, certainly clips of the performance quickly went viral on social media, given, of course, the scenes there. Reactions, though, have been mixed. When you look at one of the comments coming through so far on the right side of your screens, I'm completely scratching my head. Robot Kung Fu has reached the pinnacle of the world. It's so amazing. And, of course, a robot specifically out of Unitree is too powerful. It can do all sorts of things. Now, robotic stocks, an adjective, of course, to referring to the equity complex, are significantly higher after the holiday. Now, last year's dancing robots were worlds apart from tonight's, and the performance exceeded expectations. For sure! Exclamation point.
Well, I have to say, not everyone was so optimistic or positive on social media, because there was also people saying, what's the point of seeing all of these robots during the Lunar New Year holiday, rather? It's a time for family reunions, celebrations, and they're saying that actually the place for these is at China high-tech fairs or robotics exhibitions. Also, another commentator saying that the development of robots should aim to replace humans in performing urgent, dangerous, and heavy tasks, but saying that right now robots look a lot more like toys for the wealthy. I think, though, if you were to make a comparison from 2025 to 2026, I think it was also just the sheer scale of use at robots at this event, because in 2025 it was a lot of pressure on Unitree because they were the sole exhibitor or the sole performer in this, and they had that synchronized dance routine. This time around, though, as you said, we were seeing multiple companies: Unitree, Galbot, Magic Lab, Notix Robotics as well. So more companies in the mix, and also different things they're doing as well.
What about I mean, you're closer to this world than I am, Bill. In terms of where is the conversation right now? I mean, certainly they are much more functional. They, naked eye, they're a lot more smoother. Every time I see something like this, it reminds me of that film. Do you remember Real Steel back in it was Hugh Jackman, I think. But in terms of the commercial application of robots, where is that conversation, and how has that conversation evolved? Like, what do we need robots for in the world? Well,
we know what we need robots for, what their applications are likely to be, and it's really that key question of when can we get them into households. And you did see more household tasks, for instance, being performed at the Spring Gala, but you speak to anyone in the industry and they say that we're really still years away from that happening, because real-world environments are messy and it's very difficult to program and to have the robot from a software basis ready for those sorts of environments. So in the meantime, it's really this focus on commercialization strategies, and to that end, you see a lot of robots companies in China also looking to academics and to universities as a key sales channel, at least in the near term.
Okay, well, yeah, interesting. Certainly. I wonder what 2027, I'm now looking at 2027, right? Just looking how big the leap was from last year, to your point, to 2020 to 2026. Meanwhile, though, of course, as we pivot now to India, an Indian university is now facing criticism, and this is quite something too, for allegedly passing off a robot dog made by Unitree as its own at the India AI Impact Summit. Now, a government source told us representatives from Galgotia's University were ordered to leave the summit on Wednesday. Now, the backlash came after an online video showed a faculty member claiming that the robot was formed from the school's Center of Excellence. In a post on X, the university says it did not build a robot and never claimed to, but was using it for student research.
Yeah, I think that's a really fascinating story, and I think if it sort of underlines anything as well, it's just how much China is really dominating in the hardware space. But yeah, certainly quite an interesting anecdote, I guess, coming out of that AI Impact Summit underway in India. But let's get back to our breaking news story now as well, because as we've been reporting, OpenAI is said to be close to finalizing the first phase of a new funding round that's likely to bring in more than $100 billion. Let's get the details now from Bloomberg's Natasha Mascarenhas in San Francisco. And Natasha, thanks very much for joining us, and great reporting on this front as well. So, yeah, we've been hearing about this $100 billion figure, but now it seems like we're going to be in excess of that, and more details as well on the funding breakdown, where the money's exactly coming from.
Yes, absolutely. Thanks for having me. So listen, the deal is not yet finalized, and we're expecting details to consistently be changing, but we are now reporting that OpenAI is close to finalizing commitments from investors, and this includes Amazon, SoftBank Group, NVIDIA, and Microsoft. If those companies invest near the highest ranges of what has been discussed, the commitments will near $100 billion, and we are expecting to get more color on this by the end of this month. The other key detail is that the overall valuation of the company, including this funding, could exceed $850 billion. That's higher than what we initially expected, although the company's pre-money valuation will still remain $730 billion. So big updates, big changes, and the strategics are putting the finishing touches on the round for this tranche so far.
Natasha, David here. I wonder how much we know about the role of NVIDIA. I think Bell was pointing out a few minutes back that there were some conversations how committed NVIDIA was over the short term, over some substantial amounts of money. What can you tell us about NVIDIA's role here?
Yeah, listen, NVIDIA has discussed putting in $20 billion into the OpenAI round, which is what we previously reported. It's a meaningful investment for them, but it is one that's still being discussed. We're expecting it to be close to being completed. And so to me, yeah, the big question would be to see if that number budges either upwards or downwards. The other thing we've reported, speaking of NVIDIA and OpenAI's relationship with strategics, is that OpenAI is expected to expand its use of actually Amazon's chips and cloud computing services. So, I mean, I think it's fair to say that OpenAI is definitely working with several players, NVIDIA being one of them, but Amazon also continuing expansion there.
Natasha, great to have you with us, and great reporting as well on this story. That was Natasha Mascarenhas there joining us from San Francisco. And you can rewatch, of course, any of our segments via our interactive TV function. That's TV Go. You can also become part of the conversation by sending us instant messages. So do check it out. This is Bloomberg. Well, Microsoft's president, Brad Smith, said the company's partnership with OpenAI remains crucial. That's even as they expand work with other AI developers. Smith also told us the company's on track to spend $50 billion to bring expanded AI infrastructure to the global south.
I do think we need to act with urgency. Today, about a quarter of the population in the global north has access to and is using generative AI. But only 14% in the global south. And when you look at the rates of growth, it's almost double in the global north what we're seeing in the south. So just as electricity divided the world, the countries that had access to it for a century industrialized, they grew their economies. The countries that lacked access to electricity fell behind. We will turn this moment, I believe, either into a moment where we will close this divide. We can use AI to really enable the global south to catch up in terms of economic growth, or we will continue and maybe risk even exacerbating the great economic divide that defines our world today.
But what's most at risk for the global south? Is it jobs? Is it jobs getting eliminated, reshaped? What exactly is the biggest concern?
I think fundamentally it's economic development. It's prosperity. Because when you have a general purpose technology, meaning something like electricity that reshapes the entire economy, what history tells us is that the countries that deploy it, adopt it widely, grow faster than those that do not. So it's about productivity growth. It is about job growth. It's about opportunities for a new and younger population. It's about opportunities to solve real-world local problems using the best technology available.
Microsoft committing $50 billion by the end of 2030. What would be the priority for that kind of investment and funding?
Well, we at Microsoft made clear we're on pace to spend $50 billion by 2030 to bring AI to the global south. If you think about what happened with electricity, private capital did not come to these countries. They didn't bring power plants to these countries. This starts, I think, actually with investment and capability. So when you see a company like Microsoft investing, and we're obviously not alone, that's encouraging, especially since the investment is all about world-leading technology. But it's just a start. I think it's going to require a massive amount of funding. It is really going to require getting the private markets moving. It's going to require governments using AI because they play key roles in generating demand, and we need to scale the population. That requires schools, it requires government, it requires tech companies all working together. That's another big part of what we at Microsoft are announcing here this week.
All this happening at a time when a lot of people are getting skeptical when it comes to AI. We talk about how AI will take away the jobs. We talk about how AI is a technology that's actually enriching the tech titans. How do you reframe? How should we frame the AI story?
Well, fundamentally, I think we should recognize a few things. These kinds of technology waves typically take years and decades, not weeks or months. I think we should recognize that none of this is fundamentally ever about what technology does to people. It's about people making decisions about how to use technology. People who run businesses, people who run governments, people who run nonprofits. We have an opportunity, I believe, to use AI to make jobs better for people. There will be some processes that are automated. There will be some jobs that are displaced. But new jobs will be created, but mostly I think many jobs will change. And the key is to give people access to AI tools, give them the skills that they need to use them, give people the opportunity to innovate in how they work. I think when you do that, you create a much better foundation for the future.
Given what you have just expressed, I'm just wondering how that's shaping the way you hire in the countries that you do business in, like India.
I had a fascinating conversation earlier this week in another country. Somebody who works in a company was describing the contest they had so that employees could use AI and create more use cases, to create uses of AI that advance productivity or build better products. But the most interesting thing this person said to me was it wasn't fundamentally about creating a better product. It was about finding the people who wanted to lean in, who wanted to innovate, who had creativity and ambition. I think there's something that's important and even inspiring for all of us in that. Give people access to the tools, to AI, see what they can do. If you find an employee who wants to innovate, that says that that's an innovative person. That's the kind of person you want to bet the future of your company on by investing in their development.
So in an AI future world, will you be hiring more or fewer people?
I think I might be hiring the same number of people. I think they might be doing different things than in the past. I do think that entry-level work inevitably is changing. Instead of coming in and just doing one thing, and it may be more the basic research or checking of citations or sources, I think entry-level work may become a little bit more like apprenticeships. It may become something where you want people to be exposed to multiple different tasks and skills for the first year or two. I think this is a great time for employers that are far-sighted, What do you really care about the most if you're a great employer when you're hiring someone new? Is it somebody who's going to do something that needs to get done for the next 6 months but may not be all that demanding? Or are you hiring people who are going to become the employees that will lead your firm into the future? The people who 3 and 5 and 10 years from now are likely to be sparking the innovation you need. That, I think, is and often should be at the heart of what great employers are looking for. Right now, we all know it's a tough job market for people graduating from universities. But flip that on its head. It's a great time for employers who are far-sighted, who care about talent, who want to invest in people, who are going to build the workforce, not just for the next year, but for the next decade and beyond. I think that's what we want to be at Microsoft. I think that's what everybody who really has a long-term vision should aspire to do. And we need to make AI and AI tools and AI skills a fundamental ingredient for everybody that we hire in that way.
Brad, I want to take a look at your Microsoft's partnership with OpenAI. How do you see that evolving longer term?
Well, I think it remains a critically important partnership for Microsoft. We bet on each other, but it's not as exclusive as it was, say, a few years ago. OpenAI uses our compute, they train models in our data centers, but they work with other companies as well. We critically rely on OpenAI's frontier models. They are among the best. On many days, they are the best in the world. But we have a relationship with Anthropic. We use open source models. We're developing our own models. So on both sides, we work with more partners. But I think the partnership between the two of us remains an imperative. It's a huge priority for us at Microsoft.
The question is why? Is it a hedge? Is it a strategic pivot? How would you describe that move looking at alternative partners?
Well, look, if you want to think about the partnership between OpenAI and Microsoft, all you have to do is ask one question. Would any of this generative AI sector even exist if the two of us had not come together? OpenAI created something that no one else even understood was possible when they launched ChatGPT. And OpenAI could never have created that without Microsoft's compute and really frontier data centers on which to train that. We built something special. We'll each do special things on our own. We'll each do special things with other companies. We'll each do, I think, very special things with each other.
Just one final question, because we're running out of time, apparently. Copilot, is it losing traction?
I don't think so. It's gaining ground. It's getting better every week. It's getting better every month. I say this as a user, not just of M365 Copilot, but our consumer Copilot, our researcher agent, our other agents. You know, we're seeing usage grow. We will continue to add features and functionality. I personally think it is an important part, not just of Microsoft's past and present. It is a key part of our future. It is a key part of, I think, making everyone more creative, more productive. I certainly find that in my own work each and every day.
Has Linda there, of course, with the Microsoft President, Brad Smith, of course, big event, of course, today there in India. So stay tuned, of course, for lots more coming through there out of our coverage there on the ground with us.
Yeah, and you're also taking a look at our new online feature. That's the Bloomberg Video Hub, so subscribers can explore live streaming, news, our interviews, all of our Bloomberg TV shows, documentaries, reporter analysis, and more. So do check it out at bloomberg.com/videos. This is Bloomberg. Welcome back to the China Show. Here are some of the top political stories that we're tracking. And the Wall Street Journal is reporting that a major US arms sale to Taiwan is in limbo following pressure from Beijing. The report says some in the Trump administration are concerned that approving the deal could derail the president's upcoming visit to China. Trump said earlier this week that he had discussed the issue with Xi and would make a decision soon. A South Korean court is set to deliver a verdict on Thursday against former President Yoon Suk-yeol that could see him sentenced to death over his shock declaration of martial law in 2024. The Seoul Central District Court hearing caps a year-long insurrection trial that began shortly after his short-lived attempt to impose military rule. Prosecutors are seeking the death penalty, but Yoon could also be sentenced to life in prison. Former Philippine President Rodrigo Duterte says he's not well enough to attend next week's pre-trial hearing at the International Criminal Court. In a request filed by his lawyers, Duterte says he's old, tired and frail and accepts the fact that he could die in prison. The 80-year-old was arrested last March on charges of crimes against humanity linked to his brutal anti-drug campaign which killed thousands of people. National Economic Council Director Kevin Hassett has blasted a New York Fed study on tariffs, calling it an embarrassment and saying those behind it should be disciplined. The Fed report found that nearly 90% of the tariff burden in 2025 fell on US companies and consumers. Hassett argues the research overlooks changes in import volumes and insists Americans will ultimately benefit from the tariffs.
Okay, just an update in case you missed the news coming out of Japanese chipmaker. Of course, we are on the break there out of the company. So it may have suffered a ransomware attack. So, and this was a few days back, right? So it's the 19th of Feb here in the Asia Pacific. Already, if you're watching us, of course, out of another time zone. So the company said it detected unusual activity back on the 15th with some prelim findings suggesting it's unauthorized third-party access into the company's network. They're still examining any potential financial impact on financial results. Shares, of course, as you can see on the lunch break right now, down about 2%. And a lot of the declines did happen at about the same time as we did get more lines coming through here out of the company as it pertains to the specific suspected ransomware attack. Okay, movers in Oz coming up on your screen. So we have Rio, of course, earnings coming through later today. Keep an eye on that. Big miners, of course, are also punching much, much higher today. And of course, as it pertains to the market itself, at 9,100, we're effectively now set for an all-time high close. We'll see how, of course, the rest of the trading session unfolds. Right, let's have a look at the Kospi index. One, of course, that has been really trading to the upside substantially. And within that, of course, you have the likes of Samsung coming up on your screens on the back of reports locally that it is negotiating higher HBM4 prices that could be in the order of about 20-30%. Kospi's up 3%. We talked about odds. Singapore up 1%, also in heavy volumes today. And of course, we're also looking at A50 futures because we are still on a holiday here in Hong Kong and also on mainland China. Speaking of, on top of those two markets, Taiwan is also not trading today, as well as Vietnam. Okay, that's it from us here today on the China Show. We will see you all tomorrow. Insight with Haslinda Amin is coming up next.